Good morning and welcome, Patriot Radio News Hour. Joe and Jason on this Tuesday. I hope it finds you well out there as, again, we creep closer and closer to Christmas and all of the fun that brings. But don't worry, we're going to have a fun time here today. 800-951-0592, the physical delivery of wealth insurance. Gold and silver, it is what we do. AllAmericanGold.com is the website. And I don't know. Obviously, we don't know, right? Gold hits an all-time record high, but then, is immediately exhausted if you believe the headlines yesterday. I'm going to say this. Add here today. We'll see what the jobs number, so this is jobs week. We get ADP tomorrow, jobless claims on Thursday, of course, the government jobs number on Friday, and if the JOLTS data, which I don't know how accurate it is, they track all the job openings, all the, like Indeed and all the job sites, and one of the biggest drops on record just came in this morning. The JOLTS data, which, it's been 10, 11 million job openings, been firmly in the 9 million plus openings. Jason, the number today, a little over 8 million jobs, big drops across the board with exception of some IT jobs. But it does look like all of a sudden the jobs data, because that's been the one outlier, without a doubt, right? Job growth's been strong. Jobless claims haven't been that bad. Even though, Challenger Gray and Christmas, they track the layoffs for the big companies. States have rules in place, like if you're going to lay off more than 50 people or you're going to lay off more than 100 people, hey, you got to give us a heads up. You got to tell us ahead of time that you're doing those things, and that's what Challenger Gray and Christmas tracks. Those numbers are way up, but we haven't seen it in the data. This year, the JOLTS data today, not only did they have a low print, but then they went back and revised lower pretty much the last 6 months. So kind of coming more in line. Obviously, it's only one number, but it does appear that we're starting to finally see some of that softening in at least some of the job data, Jason.
Well, that's what the Fed's been pushing for a year and a half now. So
right.
We'll see how successful it gets, because we know that they're in that rock and a hard place, lower rates and save the economy or raise the rates and stop the inflation, and they're trying to do the pause now. And we'll see if they've done what they think they've done, right? We'll find out, which to me it's just not going to be successful in the end.
Yeah, so everyone's been talking rate cuts. I really think at least for 24 hours. Yesterday, they're kind of, maybe we got a little too excited, right? Maybe we need to calm it down a little bit. Maybe it's not quite going to be the way we thought it was going to be. We get some bad employment data. Boy, you'll see that talk ramp up here. So it could be a good opportunity to get in here. We've got a great opportunity in silver. Listen, all you silver guys out there, and you know who you are. Silver, gold's got a great setup. I think platinum has a really good setup. And what do I mean by that? Which is the price is still low, relatively speaking. And the supply-demand fundamentals really look good. In other words, a lot more demand than there is supply. It's same thing with gold. Gold's got the same setup. They all have similar setups. Platinum or palladium and rhodium, not so much. Right? Their setups aren't very good. But those three metals, and I think silver, we all know probably has a chance to really outperform. But we have rolls of dimes and quarters on sale today. This is, utility silver, junk silver, pre-1965 silver. Think about this. Before they created the central bank and started devaluing our money, they had silver in the coins. I mean, think about it. Silver's over $24 an ounce, and it was inexpensive enough that was what was in our dimes, quarters, and half dollars all the way through 1964. But rolls of dimes, the $5 roll of dimes, $100. Rolls of quarters, $200. We've been here before, but that was, that's pricing that, $22, $23 silver, a really good opportunity in utility silver. Premiums came in, and so right now, Jason, I would say premiums on utility silver are back to normal here. This is normally what you would expect. This is by far the cheapest way to own government hallmark silver, and if you're going to need to barter, which I think a lot of people are accepting the fact that when the digital currency comes, that's probably going to be the case. These are great coins to do that with, Jason.
Yeah. Quarters, dimes, half dollars. Pre-64 silver is always a great way to be in silver, Joe. So, and with the price rises we've had recently, even though it's gone down a little bit this week, be back at $100 dimes, $200 quarters is extremely good, Joe.
Yeah, I mean, a roll of dimes could be 2 or 3 boxes of ammo, right? I mean, and depending, right? Maybe it's only 1 box of ammo, but still. 800-951-0592. We'll be back. 800-951-0592. Patriot Radio News Hour. Joe and Jason here on this Tuesday. Right now, the Supreme Court's hearing a tax case that I think all of us kind of need to be aware of it. People are starting people that are connected to government, that believe that equality is needed. In other words, we need to take money away from successful people and redistribute to less successful people. I mean, it's pretty simple. Government should not be in this business. This shouldn't even have to be a problem, income tax. And we shouldn't even have it. But I'm going to give you the long and the short of what's happening here. Remember in 2017, the Republicans and Donald Trump said, hey, listen, our corporate tax, it's way too much. Way too much. It's not competitive. And, of course, most of these companies, yes, the headline number was more than say, Europe. But you got to remember, there's all kinds of loopholes. Only an idiot corporation, right, was paid this amount, 28% year after year after year. Most of them, they may pay 28 or 30% one year, then the next year they pay nothing. But anyway, we had to fix it. And one of the ways they decided to, quote unquote, pay for this tax cut to businesses was they wanted to start taxing unrealized gains. And this is what is being tried at the Supreme Court today. And it has to do with taxing companies and or individuals. Got to remember, right, a lot of these companies are individuals. Obviously not the big companies, but it's not like Microsoft and Apple's bringing this suit. Okay? Why? Because they're like, we got so many loopholes, we don't pay any tax anyway, right? No, it's a small company that you've never heard of that has to do with they own shares in an Indian company. They've never sold the shares. They've never received any income from owning the shares. But the government decided we need to tax that anyway because the shares have gone up. Right? So, well, you bought the shares, and I don't know. Let's just say, hey, they bought them at $5. Now the shares are worth $10. Now, you didn't sell it, but we want the money anyway. Like, you know, acting like you did sell it. And that is what is going on in the court today. And you should just see how they're freaking out that, oh, my gosh, if the Supreme Court doesn't rule in our favor, think about what they're going to do. They can ruin the whole tax system, which I think would be wonderful. Just let's face it. If anything, the way our government spends money, if this was anything else, you'd be like, yeah, I'm not giving you any more money. This could be, this is like the government is your children. And they just sit there and say, give me money, give me money, give me. Well, it was great. Hey, when they didn't have a job, when they weren't old enough to work, you kind of got to give them the money. Right? Or, hey, you got to do some chores to earn that money. And once they're old enough, you get your own job. You know, listen, everybody out there, you've helped your kids from time to time. But you know the ones. You know, the ones that they have the permanent sucking sound on your income. Eventually you say, that's it, you're cut off. Right? I'm cutting you off. I mean, that's really what we should be doing here. But it is going to be interesting if they don't, Jason, strike this law down. You know what's coming next. The government is in desperate need. Now, they're not telling you this yet. But believe me when I tell you, desperate need of money. How about today? Was it Biden was out, or maybe one of his people was out. We're going to be out of money for Ukraine in days. We're going to lose the war unless you give us some more money. You got to do it right now. We spent $111 billion and we need more. They're in desperate need of money. And wait till February. Maybe it's March. When the reverse repo runs out. Oh my gosh, they're going to be in such desperate need of money. And the ability, if this law stands, I can see what's coming next. Hey, we want to tax all unrealized losses or gains, right, Jason? I wonder if it works in reverse. What if you had an unrealized loss? Do you get a credit? I mean, I don't know. But could you imagine the government now? Well, I know you didn't sell, but you bought it. You know, you bought Apple stock, you know, back in 1995 for $5. And because this law says, I want to say in this law, they can go back 30 years. So you could be sitting on something you bought 30 years ago, never sold it, never reaped a gain, and they're going to want their money, Jason.
Right, and this is, I think this law will probably stand. I think this is what the government wants. I don't think the Supreme Court is beyond a little corruption, just like the rest of the government. And this goes hand in hand with the central banked digital currencies, because once they know what you have, it's going to be a lot easier to tax it out of you. And Joe, this isn't, the wordage is always off. This is not taxing gains. There's no gain here. That's the wrong word. They want to tax potential. You know, when you start talking about taxing potential, I think everybody's against that. But taxing unrealized gains, oh, well, they've got a gain. Gains mean taxes. No, they're taxing potential. If they call it that, Joe, how could it stand up? Because they potentially could lose money. Can you imagine getting taxed on your gains and then the stock crashes? Are they going to give it back? I don't think so, right, Joe? They're not going to give it back.
So it's going to be interesting how this plays out. I will tell you, the appeals court, 5-4 in favor of the law. So at least through the system here, the people that are taking it to the Supreme Court. You know what? It's funny is the bill was about $15,000, so it wasn't like they were getting hit with it. But they're like, "Hey, this isn't right, right? This isn't right." And obviously, they have means to pay for all this stuff. But again, so far through the court system, the government keeps winning. The government keeps winning. It's been close, but they keep winning in this one. I think this is something right now. All of us should be concerned that this thing is upheld by the Supreme Court, because right now, obviously right now, while you're doing it for businesses and a lot of these businesses, you know, it's one person or maybe a husband and wife that own the company. You know, yeah, we're a business, but you're really taxing me. Because, again, to Jason's point, I think this opens everybody up to be taxed on the potential of making money, right? Just because you bought a stock and it's up today doesn't mean it's going to be up next year, 5 years, or 10 years from now. But taxing the potential, Jason, it's just a dangerous place to be, and with what the deficits are going to do, because there is no will. There is no will inside government to stop spending. And already I watched some of the idiot TV, which I always hate doing, but I had to watch. I need to know. And you can hear Republicans talking about, we need to make a deal, let's get border security. Jason, they just want to keep spending money.
I don't know the last time the government didn't want to spend more money. You know, I know that we haven't really had austerity in this country. I guess back in the 90s when they tried the so-called balance the budget, I guess they kind of cut back, right, with Clinton. I guess there's a little bit of that there. You know, there was a little pressure on the government. But other than that, before the 90s and up to today, when's the last time they cut anything? When's the last time anything was cut? I can't remember anyone's budget and then federal government being cut since I've been alive, basically, Joe.
Right. Well, they like to tell you they've cut stuff, and normally what that is, well, we cut the increase, right? We cut the increase. Well, wait a minute. That means you still gave them more, so you didn't cut anything, right? That's usually what we get when they do say cut. Oh yeah, well we cut. Oh, you did? Well, yeah. Well, we were going to give them 5% more. We only gave them 3%. So you see, we cut 2%. Well, no, actually, you increased it by 3%. But that's usually what we end up getting with all of this. So it's going to be, it's a very interesting case. I will be very curious how this pans out here. I think this is a very, very important case for government. They are obviously fighting this thing very, very hard. They need access to money, and big access, right? That's the problem, right? They think about this. They need almost a 40% increase in the taxes currently collected to balance the budget today. Just for the year, a yearly budget. And every year that number gets bigger and bigger. By 2025, right, we'll probably be talking about a 50% increase is going to be needed, right? Just to get these numbers in line to stop growing the debt. And, of course, I think the government realizes, well, we don't need to run a balanced budget. But we probably could get by with running a $1 trillion deficit every year. Unfortunately, the number, Jason, it keeps growing. 2 trillion, right? 3 trillion. Heaven forbid things go, 4 trillion. This is kind of the problem. And the best way to get big money is to tax these unrealized gains. Could you imagine what that would do to Wall Street? Now, this only has to do, by the way, just so people know, this only has to do with companies that invest foreign. This is all foreign investment. They're not taxing unrealized gains if you invested in an American company. This is, at least for now, hey, well, only when they're investing that money overseas. When you're buying stocks from a company that's overseas, it's not on our stock exchange, it's on somebody else's stock exchange. And obviously, right, Jason, well, we know what comes next, right? Well, first you said overseas. Right? Well, then it's here, right? And then it's everything.
Yeah, then pretty soon it's just something you bought here locally in the United States, and then you sold it. You know, hey, you bought that car and you sold it for $1,000 more. That's unrealized gains. You know, a little extra car taxes, right, Joe? Just because someone buys a car
this
for more
would
than...
more be like, how about this? You bought this car. Well, gosh, prices went skyrocketing. Now you still own the car, but you bought it for $20,000. And now it's worth $30,000. You know, hey, there's $10,000 there we can tax. I mean, this is kind of what they're talking about. But wait a minute, I still own the car, right? I'm still driving it. That type of thing.
Well, you remember the number one asset that growth in 2021 was used cars. It went up higher than everything. Can you imagine what unrealized gains would have done that year?
Patriot Radio News Hour. Whenever that decision comes in, I know it's being tried today. We'll update you on that. We'll be right back after the break. 800-951-0592. Joe and Jason, Patriot Radio News Hour here on this Tuesday. Quick look in. Everything's pretty much down today. The Dow, the S&P, the NASDAQ, all lower today. The 10-year note, man, 418 on a 10-year note. Surprisingly, the dollar's right now. Of course, the dollar had a horrible November. I'm really kind of looking at this more like a dead cat bounce here. That's why I kind of think that, buying gold and silver right now, a good idea. You're not buying the top. I mean, think about it. I mean, gold was, $21.35 Monday night, Sunday night. Right now, down 10 at 2015. Silver's off 50 cents, $24. Rolls of dimes and quarters today. Great opportunity here. Silver dimes, $100. Silver quarters, $200 a roll. 800-951-0592. And again, are you sitting there thinking to yourself, man, this makes no sense? Think about what the rally in Wall Street's been. The Fed's got to cut rates. I mean, there was a headline today on one of the, I don't know if it was Market Watch or CNBC. The Fed needs to cut rates 5 times next year. I'm thinking to myself, when people make these comments, do they know what they're saying? And, of course, they're talking about this. What a great thing this will be. If that's true, that'll be terrible. Right? Because that means the economy really is going to be doing horrible, right? I mean, think about it. Cutting it 5 times, that means you're cutting almost, you don't cut in January. That means you're cutting 5 out of the next 7 meetings, right, Jason? I mean, that would be pretty significant damage to the U.S. economy. I don't think people really realize what it is they're saying. And for all of you that think, oh, my gosh, yeah, these rate cuts are going to be great for my equity prices, I'd be concerned. That's why we keep telling you, check out our friends at Y-Refi. Get up to 10.25% return. Fixed. Year after year. Every year. Without having to stress out, without having to worry about it. InvestYRefi.com. That's the word invest. The letter Y, REFY.com, or just call them. 888-Y-REFI-24. And you guys know this. You got to have minimum $50,000. You can use an existing IRA or 401k. Jason, I know people now that they're putting some big money in there, and they're using it as income to go along with their Social Security checks, right? Because every month you can turn your income on, you can turn it off, but a lot of people, that's what they're using it for.
Yeah, there's some utility there. You can pull part of it and leave part of it, so that way slowly it'll grow, and you can pull some out, right? You don't have to pull the full 10% out. So there's it's what investment is. You put your money someplace and you bring a return. I wouldn't say that refi is 100% risk free, but it's built on a pretty strong foundation. So if you're going to invest in something, this is about as good as anything out there, and the return's pretty good, Joe.
Right, exactly. So check it out. At the beginning of the show, we were talking about the setup on metals. 3 that are really good, 2 not so much. Right. So gold setup is good. Silver setup is really good. Platinum setup's really good. Platinum, they're going to have a 1 million ounce shortfall this year in platinum. Palladium and rhodium, the setup's not as good. They had great setups for like the last 3 or 4 years. Now it's kind of going back the other way. But I want to focus on silver a little bit. And I know, right? And I say this. Listen, I like silver. I do. My only problem with silver is it's big and bulky and heavy. Takes up a lot of space. How many times have I said $1 million worth of gold? I used to say would fit in the shoebox. That's gone. And that was $250, $300 gold. But when you look at $1 million in gold, your wife can have it in her purse. Seriously. Along with the hard candies, the scrap pieces of paper, all the other stuff all the things they got into the makeup, all that stuff, right? Kleenex, they got a Kleenex that's been in there for 4 or 5 months. They got everything in there. You got $1 million worth of gold in there. Nobody would know. $1 million worth of silver. Yeah, you're not hiding that, right? I mean, that's a lot. It is bulky. But let's look at why do I think it has such a great setup in price. And think about silver's fallen about $2 since Friday. And so you're going to save a bunch of money. And here's a looking at the setup. The gold to silver ratio, I just looked at it. It's 83.94. So let's run it. 84 ounces of silver for 1 ounce of gold. 84 ounces of silver for 1 ounce of gold. When our currency was backed by gold, that ratio was what, 15 to 1, Jason? Was it 15 to 1?
Yeah, 16 to 1 and 20 to 1 seems to be the level
16,
they wanted at.
Sorry,
yeah.
16 to 1. I had to go to the expert there. 16 to 1. Now, obviously, in modern times, once the government decided to allow the metals to trade freely, a lot of people point to go to 1981, right? So gold $800. Silver hit an all-time high of $50, right? So, again, that's 16 to 1. And ever since then, a lot of people think the number should be like 50 to 1, right? 50 ounces of silver to 1 ounce of gold. That indicates, hey, silver is fairly priced. I'm more conservative. And like I said, I've been doing this a long time. I like 65 to 1. So when the number gets above 65, I think silver's either one of two things, right? Silver's undervalued or gold's overvalued, right? It's one or the other, right? Right now it sits at 84. And here's why silver's undervalued. Look at the demand that's roaring through the gold and silver markets as we speak today. Economics 101 tell us that it doesn't look like gold's overvalued at all. If anything, people are making the argument it's undervalued. When we get back, though, we're going to talk about the undervaluation of silver and what we can expect moving forward. That's coming up next. $800-951-0592. Joe and Jason, quick look. We're digging into silver. 1792. That's when the United States, they passed a law saying the price to gold and silver ratio 15 to 1 in 1792. Once it allowed to float freely, okay, remember, so gold and silver prices were fixed, right? As we know, after 1933 until the 70s, it was illegal to own gold in this country. It got to a low of 16 to 1 in 1981. It got to 30 to 1. Most people forget this. In 2011. So it floats quite a bit. You know my story. Silver's the younger, wilder brother, so it has these wild swings. If we were doing it from a geology standpoint, so how many ounces of gold are in the Earth's crust versus how many ounces of silver? It'd be 19 to 1, by the way. Just, if you wanted to do it in geological terms. But again, as things have rolled on, we're sitting at 84 ounces of silver for a single ounce of gold. And we know, okay, is silver undervalued or is gold overvalued? Well, the best way to determine that is looking at the supply and demand fundamentals. And both of them are extremely favorable. But when it comes to silver, they're saying that silver demand set a record in every single category. So what does that mean? Well, industrial demand, jewelry demand, investment demand, every single category in 2022. Silver demand is going to beat that in 2023. Overall demand, year after year after year, continues to go up. Now, could you have a drop in jewelry demand, or could you have a drop in investment demand? Sure. But what they're saying is every year, and of course when you think about electric cars, green energy, right, all this stuff that they're ramming down our throats, silver's a huge player. And at the same time, here's where things are getting interesting on silver. Because if you go back to the financial crisis, almost without exception, there's a few, but silver demand started to take off. That's when silver demand really started to take off. But silver supply, it was able to meet it, right? The silver supply was going up year after year after year. There's a few exceptions, but it looks like, at least for the next several years, the ability to increase silver mining output has gone away. Matter of fact, last year, gold mining or silver mining actually fell. Now, it didn't fall 10%, but it was down to 822 million ounces. And guess what, Jason? Looks like this year that number is going to be down again. So when we look at silver demand versus supply, we have deficits. And what's been happening is these silver deficits, they've been eating into all that excess inventory. Think about this. Silver was what? 3-4 years ago. Got down to what? $13, $14? Because they were mining more than what was needed. That is gone. And Jason, they're burning through all of that excess silver to the point where we sit right now. This supply-demand deficit that we are currently in, it appears that by next year there will be no more extra supply left on the market. It's almost like the reverse repo, but in silver. Hey, all that silver that had been mined over the last 10 years that was a little too much, Jason, it's all gone.
Yeah, and I was doing this the search of gold silver ounces mined, and I got your 19-to-1. But I've heard many silver gold experts, so-called. They say that at the ounces of silver coming out today in 2023 is 9-to-1. Only 9 ounces of silver coming out to every 1 ounce of gold. I've heard that because it always seems like the real story is always a little hidden underneath, and it's very possible. I've heard silver demand, silver ability to pull out of the ground is just disappearing rapidly, and so yeah, your ounces of silver to gold might be lower than 19-to-1. It might be closer to 10-to-1, Joe.
So let me give you, and that could be maybe what's being mined today. That's interesting. And when we look at this deficit, let me give you a number. 237 million ounces was the deficit. Unlike gold, silver gets used up, right? So when you use it, it's used. You don't get to, when you have a little bit of gold in your cell phone, a little bit of gold in your laptop, when the laptop doesn't work anymore, the cell phone doesn't work anymore, there's still a little bit of gold left. That's not how silver works. When you use it, you've used it. It gets all used up, and it goes away. And they're saying that the last 2 years have essentially wiped out the last 11 years of surplus supply. It does look like, Jason, right, when we look at silver, when they make these big runs, they did it in the 80s. They did it in 2010, 2011. It looks like 2024, that setup could be back again where it makes that run, right? Getting closer to well below 50. We'll be back right after the break. 800-951-0592. Joe and Jason, Patriot Radio News Hour on this Tuesday. Rolls of silver dimes, a $5 face value roll of dimes, 50 silver dimes at $100 today. $10 face value roll of silver quarters, so that's 40 silver quarters, twice the amount of silver, right? $200 today at 800-951-0592, and we're looking at silver. So silver, it has these swings where it goes well below and well above the ratios. But I just put some numbers together because, like I said, you had 11 straight years where they mined more silver than what was needed. Between last year's deficit and this year's deficit, all of that silver, all of that is gone, erased. There is no more, which kind of tells me, okay, here we go again. Remember, silver ran to 50-to-1 in 2018. It ran to 30-to-1 in 2011. I think we're going to see, and this is why this is why people are so bullish on silver, and it really is going to be, now that all of that excess inventory is gone, I think that's going to be the big driver in the silver market as Tesla, Tesla's like, hey, I need 10 million ounces of silver, and the miner's like, well, how about 6? Well, no, I need 10. How about 6, right? You see what the problem is. Just look at it this way. If gold right now is at $2,015 if it goes to 65 to 1, silver would jump $7 from $24 to $31 at 50, right? At 50 to 1 right now, it'd be $40. So you can tell here at $24, man, it's really underpriced. But I put some numbers together. $2,500 gold at 65 to 1, silver would be $38. I mean, almost not quite double where it's at. But at 50 to 1, it would be more than double. That would be the all-time record high at $50. At 30 to 1, I'm not even going to 60 to 1. I'm not even going to go there. At 30 to 1, it'd be $83. At $3,000 gold, if silver got to 30 to 1, Jason, silver would be $100. But just being conservative, you're looking at $50 silver, right, at $3,000 gold. And I'm just, the setup for silver really starting next year and over, I would probably say the next 5 years, looks really good because it's hard to get more mine capacity, right? Right now, that's the thing, for especially with inflation, the cost of everything, to get more silver mines open and running, we're going to need to see a big jump in the price, Jason, to make it worth it.
Really, all you need to know about silver is all commodities have hit record highs since 2020, except for silver. So you know it's manipulated, and they can only hold it for so long, right, Joe?
Only can hold it for so long, baby. $100 rolls of dimes, $200 rolls of quarters. Jason and I, we're coming right back with the half-empty cup.